Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Oana.
Okay, so we're going to do an update to the Las Vegas real estate market. This is our September sneak peek. It's a preview.
So we're peeking and we're sneaking.
We're sneaking and peeking, but we're gonna go over all the data here. It's very cool because the market is sort of not behaving the way it should this time of year.
So does it need a timeout? Does it need to rethink its life choices?
It does. It needs both those. But what's cool about this update is we're going to talk about houses, then we're going to jump into some quick condo data because we have the same thing going on condos. Okay, so here's the first one. This is Las Vegas market action. It's 45. It's been 45 to 46 now for months.
It's boring.
Last year at this time was like 32.
Yes.
It says strong sellers market. It is a strong sellers market.
It is. So, but it's a strong sellers market across the country for the most part, right? We all know that. We know that there's a lack of inventory. We know that sellers are not too interested in selling their homes. We know that about a third of homes have multiple offers. So we know all those things because we are so knowledgeable, right, guys?
Okay.
All right, what you got?
All right, so let's jump over here, real-time market profile. We'll start with this median list price. In May, it was 560. Now, April, May is usually the hottest time of the year, right? It's 565 right now.
Definitely, the market has to rethink its life choices.
Yeah, that's unusual. It should be less. It normally falls this time of year. What it does is it sort of falls into the fall, but then it increases more into the spring. And then it just keeps doing that sort of wavy sine wave function, but in an upward direction, okay? So that's the interesting thing. Median price new listings is about $495. Now, we get this question all the time. Wait, why is the median list price $565 but the new listing's $495? Do you know the answer?
Enlighten us.
Okay, because what happens is the homes on the bottom end are selling faster, so they're disappearing off the market. So the newer listings that are coming on are not the $1 million houses. They're these $300,000 houses that disappear quicker. So there's more churn down there. So the median list price is higher because the bottom of the inventory is falling faster. It's disappearing faster. Mm-hmm. That's the main reason there, okay? Per square foot, May it was $256, it's $259. So it's $3 a square foot more than it was May, which is highly unusual. This almost has never happened except for 2020 and 2021. Those are the only 2 years. It didn't happen last year. Last year it was down in Vegas.
Right. So maybe this is the new normal.
No, I don't think it is. It's because of lack of inventory. We're going to go through, as you can see, days on the market is down, which normally is climbing now because homes are sitting on the market, right? But here's a big one, inventory. May inventory was 2413. Right now, we should have probably 4,000 homes on the market, maybe 3,500 to 4,000, right, Oana?
We should have, yes, certainly for our market size, at least that, but we don't.
Yeah, because we have 400,000 houses. This is just for Las Vegas. We have 400,000 housing units in Las Vegas, and we have 2,413 in May. We have 2,265. So we have less. It's going the wrong direction. We need and this is why sales are down. People are like, oh, but Todd, sales are down because the housing market's doing terrible. No, sales are down because inventory is down.
Right. So the number of transactions are down. That's not the same thing as home values. That's just the number of transactions.
Yeah, it was just like when the Elmo doll sold out and no one could buy an Elmo for their kids. And then people were like, oh, well, Elmo sales are at zero this week because no one wants them. No, everyone wanted one, but they couldn't get an Elmo. That was a big deal back in the late 90s. Do you remember that?
Do you understand?
Elmo doll sold out?
Do you understand most of them don't even remember don't even know what you're talking about with
they
the
don't have
Elmo doll.
Okay, so we'll go to median list price. The reason why, now remember the bottom of this chart's not zero, it's like 300,000. So it looks like a 30% drop, but it's not. It's not a very big drop. Mm-hmm. Most of this was people anticipating a falling market because they were told things were going to get really bad. Mm-hmm. So they panicked, started dropping list price to sell the house. And this was where there was an opportunity where we said, October, November, December, January, we said this more than a year ago, that would be the best time to buy in Vegas. And that clearly was the best time to buy. A lot of people gave away a ton of equity because they just wouldn't hold on their list price. Now, we had listings that we sat firm on the list price and waited, and they eventually did sell at list price, right?
Right.
And then we had some sellers who were just like, nope, I need to sell. I want to sell now because the market's going to crash, and I know it's going to crash. So I just drop the price and sell it, right? And that's fine. But you can see home prices from 2021 to 2022, same day, are about the same, those two dots, but then substantially higher right now, median list price.
Mm-hmm.
Okay. That was actually, median list price there. Okay. Now, price per square foot. This is more accurate to the price. This looks a lot better. Also, the bottom of this chart's up 150. So you can see that price per square foot is about the same as it was last year, and but a lot more than it was 21. Mm-hmm. Now, remember, in October 21, interest rates were still 3%.
Right. So
how is it possible that price per square foot could be like $25 a square foot more when we have 7.5% interest rates now, and we only had 3% rates back then? Does this make sense?
Less inventory, more buyers chasing less houses, and they're willing to pay the money for it. And, by the way, looking at price per square foot is a lot more accurate way of looking at prices rather than just the overall dollar amount, because that gives you a better comparison across the market rather than saying, well, this sold for this many bananas and that sold for that many bananas. When you're considering the price per square foot, that kind of evens things out a little more.
Yeah. This is the big one, inventory here. Okay, if you look at this chart, all these dots is the same day for the last 5 years, okay, including today. And you could see that this time of year, inventory is getting close to peaking, and then it declines. Oana, inventory right now is the lowest it's been on this date probably ever, for sure the last 20 years. Mm-hmm. We're close to our 2021 level. The inventory is going to start disappearing again. Like, it's been chugging along, sort of going down very slightly. You could, look at the chart and see this. What does this look like in 4 months? Because magically a bunch of houses aren't going to come on the market.
Well, I think, normally sellers get a little more amenable in the fall, but I don't think that's going to be necessary for them to do that, because as inventory continues to decline, the number of buyers is not going to decline. So I think sellers are going to have a very nice fall and winter.
Yeah, I think sellers are just going to be able to list for a reasonable price and sit put, and someone's going to come by. I don't think they have to play this game where, I'm competing with a bunch of people. And there are neighborhoods that we know that are like good neighborhoods to buy investment properties and stuff, and there's just no inventory. So you could come on the market basically wherever you want and just be patient. Eventually you're going to get an offer, probably be able to sell for a decent price.
Right. So what we're saying is market value. We're not saying the moon, okay? So please do keep that in mind when you're listing your home, whether it's with us or with someone else. Make sure that you are listing your property for market value. And you are very welcome to list with us.
Yeah, that's what we do. Okay. Oana, but what about the recession right around the corner? The job losses and then the foreclosures will happen almost within days, and the inventory will shoot up.
No.
Okay, let's start with recession. If let's say the nation goes into a recession, GDP shrinks at 0.2%. Does that mean every place in the country is losing jobs? And
absolutely not. So not everybody participates equally in a recession, and there are places that actually thrive during recessions. So it's a market by market situation. So that's the first part. The second part is that the chances of us having a recession, even when you consider the most pessimistic, knowledgeable people out there, we'll put it that way, not necessarily pessimistic, sky's falling people, but pessimistic, knowledgeable people out there. Even they say that there's only a mild chance of recession, and if there is a recession, it's going to be only a mild recession, so it's going to be a nothing burger as far as that goes. Now, if you're the one who loses your job, clearly that's not a nothing burger to you. But when we're talking about the economy at large, not much is going to happen. Even with job losses, the job losses tend to be temporary. The job losses are not something that are going to instantly negatively impact somebody's mortgage, because we've talked about this a lot. You contact your lender, you let them know what's going on, they'll work something out with you, you'll get another job, it'll all be okay. So that's kind of where that goes. The people who are sitting there saying, well, the foreclosures are coming because the moment that there are job losses in the wind, foreclosures happen even before you lose your job. They've been watching a little too much Minority Report. That's not how it works.
The current foreclosures that are out there, which are the lowest we've ever had since we've been measuring foreclosures, the absolute lowest, right now are all from before the pandemic started. That's when they started the process to foreclose. Even if there was a massive recession right now, massive recession, it's 2 to 3 years before we start to see these houses hit the housing market. So not going to happen. Okay, the other thing here, ready for this? Found this very interesting statistic. Nationwide, travel, tourism, and leisure, which is basically Vegas's economy, is growing at 12% a year.
Right.
12% a year. So, and this is a result of, people have 3 and 4 day weekends they didn't have before. People are going places. Flights into Vegas are full. Everyone's coming to Vegas. All these things are happening in Vegas. Formula One. Even if the country went into a bad recession, Vegas would still be growing. The economy would be growing. So it's not like, you hear a report and say, oh, there's a recession. I just saw the news and the country's in a recession. And you go, oh my gosh, okay, let's just lay off 10% of people. Well, why? We have more business we know what to do with. We need all these people to service all the customers coming in.
Right. And as far as Vegas goes, look, whatever happens to the rest of the economy is not necessarily related to Vegas. So let me give you an example. Let's say it's the worst recession ever. Are they canceling the Super Bowl? No. So we still have the Super Bowl.
We have the Super Bowl.
Let's say it's a bad recession. Are they canceling the Formula One races? Nope. Those are still going on.
All the conventions.
Right.
Yeah, nope. They're still going. You know why? Because
Yes.
people still want to do business.
Right.
They want to connect with people, and they want to, get more business.
Right. So, even if it's a bad recession, guess what? The Stanley playoffs are still going to happen. We're still going to have hockey. We're still going to have all these things that that drives people to come to Vegas, that turns the economic wheel in Vegas. So Vegas is kind of in a different situation than maybe a Pierre, South Dakota, or a Billings, Montana. It's a different kind of a situation. So while we do participate in national recessions sometimes, most of the time Vegas does not participate in them.
Okay. Now we're going to talk about condos really quick. 47 market action index, strong sellers market, a little hotter than the housing market. We jump over the real-time market profile here, and now you're going to notice right in the middle of all these, there's this little jump. Median list price jumped, price per square foot jumped, average days of the market dropped, median days of the market, inventory went up. It looks like something weird happened a few weeks ago, like maybe 6-7 weeks ago. And what happened was, for some reason, Altos Research, who grabs all the data, decided not only to include condos, but they included the high-rise condos. So high-rise condos changed the median list price, made it go up, made the price per square foot go up, because for the same square footage, they're more money because they're on a high-rise, right?
So to give you perspective, there are high-rise units in Vegas selling for $4, $5, $6, $7, $8 million. Okay, wrap your head around this. $8 million for a condo in Vegas, and now you're putting it against a condo in Vegas that's maybe $180,000.
Right.
That's why these numbers are so funky, and that's why our argument is that the high-rises do not belong in with the condos.
Right.
But
so
clearly, Altos did not ask our opinion.
But what's really important here is you can see the market's still very hot for condos. And then this inventory number, it's up a little, 1,000, but still it's, I've got more slides. It's still historically pretty low. Okay, here's price per square foot. You can see the trend is, that jump up is the result of them adding high rises in here. Now remember, it's median. So a $5 million high rise it sells you don't average it in, so it has that high weight. It's just one high data point, so it just drops off one low data point, but it doesn't they cancel each other out. So a $100,000 condo will cancel out a $400,000 condo. If it's the highest sale, just like it'll cancel out a $4 million condo. It just drops them out and it goes to the middle. Median just is the middle. Okay. So if there's 1,001, or if there's 1,000 homes that sell, then basically, home number 500 is going to be the median basically there. Okay. And then here's inventory. Inventory is low. It's below where it was last year. It's still higher than 2021, but some of that's a little artificial because it jumped up because they included high rise here. But we could basically say inventory is about the same as it was in 21, which was super hot. So we still have super low inventory. And you can see here condo behaves the same way that single family homes do, where it's about this time of year that it's still reaching its peak and then it starts to drop off and all that. Okay, overview, Oana.
Yes, boss.
People that missed out, that didn't buy like we said last year, October to January. What is their outlook for buying a place? Because the problem is, we have people that are saying, yeah, but you just wait. In 8 more months, home prices are going to tank in Vegas. Well, they said that last year, and then no, it's now. It's 8 more months from. I meant 8 more months from now, not when I said it 2 years ago. I mean, not in 2019 when I said the market was going to crash. So, what's the outlook? Because here's the problem: inventory starts to pick up, buyers come in, and if interest rates drop, then even more buyers come in. So, what does this look like?
So, whether interest rates drop or not, I think is less relevant, because I think that the supply of inventory is not going to increase. So long as that doesn't increase, I see a very consistent pricing as far as prices inching up, because the number of buyers will continue to grow. Okay, because the longer we go without inventory, the more the buyer pool grows. And as far as interest rates are concerned, if interest rates do drop, that's just going to bring even more buyers into the buyer pool. And again, that's going to put more pressure as far as pricing pressure on the existing inventory, which is insufficient to meet the demand.
In 2019, Americans had $1 trillion in their checking accounts, all across. Checks, savings, money they could just write a check and pull out almost immediately. That number today, 4.5 trillion.
Right. Oh, that also includes equities. So we do need.
No, it's not equity.
No, as far as stocks and that sort of thing, assets that they can readily turn to cash.
No, it was. I'm going to get the chart.
Okay.
It was checks and checkable.
Okay.
It was not equity in the stock market.
Okay.
Americans have a lot more than $4.5 trillion of equity in the stock market.
Okay.
And they had that equity in the stock market in 2019.
That's true.
So it's not like the stock market hasn't gone up 4 times. No, that's cash in the bank.
Okay.
It's because people liquidated stocks and people just sat on cash because they're like, I need to have cash because there's uncertainty.
Okay. Well, so the point is, people have money to spend, and there are a lot of transactions as far as in real estate being transacted in cash. We know that in Vegas we have an inordinate amount of cash transactions, but even across the country, more than a quarter of the transactions are in cash. In Vegas, they're probably more than a third. We know that nationally, 42% of homes are free and clear. So that just lets you know that there's a lot of equity out there. There are a lot of people sitting on cash, as Todd pointed out.
A lot of people.
And so that's a lot of support for real estate. So what do you think is happening with the Vegas market? Let us know in the comments. Let us know what's happening wherever you're watching from and where you're watching from. We're interested in finding out more about you. We appreciate your comments. Please remember to like the video, subscribe, hit the notification bell, share the video. Be nice to each other in the comments, and we'll see you on the next video. Bye.
Bye.